Hi, good morning, afternoon, good evening. Tom here once again, another video for you. This one's not specifically about passive income, but it's more about Bill Town, and a little bit about his little prediction about the upcoming changes in the market. So you need to pay attention, listen to what I'm saying, because I'm going to go over a little pamphlet he came out with a few weeks ago, and go over pretty much word by word, and give you some details on what he thinks is going to happen with the upcoming crash. So pay attention, listen in. All right, let's get started. If you don't know who Phil Town is, a big believer in Warren Buffett, some of his principles and everything. And he wrote two books, two best-selling books. Rule number one, came out early on, about 10 years ago. And he followed up a few years later after the market crashed with Payback Time. So very good books. I encourage you to get them. There'll be links below. You want to check them out. And if you do want to check them out, I just want to let you know that I'm an Amazon affiliate, so I may get a little commission off of what you buy, but you won't be charged anything extra. All right, that's what he came out with, the Stock Market Crash Survival Guide. All right, so what is a stock market crash? Basically saying a stock market crash is a rapid decline in a stock price across a wide selection of the market. Crashes typically come suddenly. No one's really expecting it. I mean, there may be some warning signs, but it can happen within a single day or within a week when the crash comes. Some can be thinking it's caused of a recession or even a depression. So you'll be thinking, what is a correction? A stock market correction is a dip in the market that is greater than 10%. The corrections can be stressful for the investors. They're common and even healthy for the market. However, these corrections have occurred about once a year, and almost always as short-term dips as opposed to an accepted bear in the market. In other words, corrections do not mark the end of a bull market, but instead occur semi-frequently throughout a bull market. And he's here to tell you that the stock market crash and corrections aren't as scary as they seem. Right, turning a crash into opportunity. Armed with the right knowledge, the stock market crash is actually a huge opportunity. It's about understanding how and use evaluation techniques to help you find the right companies and learn to them when they're on sale. No one says it better than Warren Buffett himself. Every decade or so, dark clouds will fill the economic skies and they'll briefly rain gold. When downpours of that sort occur, it's imperative that we rush outdoors carrying a wash tub, not teaspoons, and that we will do. So, I mean, Warren Buffett understands. That's why Warren Buffett's carrying a lot of cash right now, because he thinks a crash is coming. That's when you buy. He's a true believer in buy low, sell high. Of course, he hasn't really sold much, but he's a true believer. That's why he's carrying a lot of cash. And when the crash comes, he's going to have to be able to buy these stocks at great value. All right, over a couple of different history of the stock market crashes. Start with 1929, Black Tuesday. 1929 remains the worst crash in U.S. history and the cause of the Great Depression. Cause overly optimistic investors who borrowed money to buy stocks. This tactic, combined with a strong bull market, led a lot of people to invest without caution. Lesson: the danger of being too optimistic during a bull market. When investors trust the strength of the market without caution, the results are never good. And then 1999, you had the tech bubble crash. How many of you were involved with that during the tech bubble crash? All right. Investors excited about the potential of investing in the next big thing, which was the internet, threw their money into any company that had had .com after it. And some lesson learned: carefully evaluate a company no matter what. Seems like today, evaluate, do your research on the company, whatever you're invested in, do your research, is this company you think it will survive during a crash? Because some company did go away after that last crash, 2008. So 2008, the housing market crash. Financial institutions were taking on risky loans thanks to declining foreclosure rates, and the Federal Reserve Bank was keeping the federal funds rate below 2%. Lesson: companies are often affected by factors outside their control. Investors must keep an eye on all economic conditions. The real estate market and the stock market are two entirely different markets, yet the collapse of one quickly led to the collapse of the other. Right. Independent investors, a crash is your opportunity. It's like most of us here, we're all independent investors, okay? Managers of big funds can't get in and out of investments as quickly as small independent investors. We can easily go and buy and sell within seconds, whether using Robinhood or one of the other apps out there. And if you're not familiar with Robinhood, there's a link below if you want to check it out. You can buy and trade for free. It doesn't cost you anything, but always do your research. Rule number one, investors can wait until the businesses on their watch list are on sale price. There's no pressure to jump into the market. Make sure you find that right number you're looking for. Don't just buy because you want to buy. And Charlie Munger, a good buddy of Warren Buffett, said, "Don't make money when you buy, and don't make money when you sell. Make money. You don't make money when you buy, and you don't make money when you sell. You make money when you wait." All right. So basically, know your history. Learn from the past. Don't be too optimistic in a bull market. When you see others too greedy, you should be cautious. Always, always, always be careful when you're evaluating a company. The stock market isn't a silo. It's impacted by the world around it. So track all the economic conditions, not just the ones related to your investments. I pulled up a couple of little headlines of different sites I looked at over the last week. Everyone knows about the U.S.-China trade war going on. People and countries are overspending. That's why there's so much debt. It's only going to be bad news, okay? Bloomberg is saying global growth is slowing. Investopedia is saying interest rates are going up. Housing rates are going to go up. Robert Kiyosaki is that the next crash will be bigger than the last one. And Phil Town, there will be another market crash. It's just a matter of when. Are you ready for the next crash? Are you ready for the next crash when it comes? Do you have cash waiting so you can buy? If you're sitting, all your money is in equities. I mean, it may be good, it may not be good, but my personal opinion, you should have some money available so you can easily buy when the crash comes, when things are on sale. Because you will see a lot of your investments, almost 40, 50% of it go down. That's what happened to me in the last crash. I saw a lot of my investments go down that much in price. So have some money on the cash and available, or be ready to sell and then be back to ready to buy again if you need to. Unless you're in it for the long term, just keep it in there and just keep it ready to buy when it's low again. So, but if you haven't already, make sure you like this video, subscribe, and click the bell for notification. I will bring another video next Friday, so be here next Friday. You'll see me. Click the bell for notification. You will get another video on passive income specifically. This one's share a little bit what I know, what I've read about. And so I want you to make a smart decision in whatever you do in terms of investing. I don't want you to go in and cry next time the market crashes. I want you to be ready. I want you to be prepared. And, make sure you do your research, do your homework, click the bell for notification, and I will see you again next week. Take care. Have a great day.